Welcome to Buy the Dip, Duolingo's post-crash case. Today, we'll analyze the recent market events concerning Duolingo and assess its investment potential. Our video will cover a crash snapshot, Duolingo's underlying fundamentals, the valuation reset, potential risks and rewards, and a decision frame for investors. Let's begin with a crash snapshot to understand the recent market downturn. Duolingo experienced a 30% intraday plunge on November 7th, wiping $5 billion off its market cap. This significant drop was triggered by softer Q4 bookings guidance, despite a strong Q3 revenue beat. The sell-off was primarily triggered by weak Q4 guidance, a strategic pivot towards long-term user growth over immediate monetization, and a slight miss in daily active users (DAU). Now, let's examine why Duolingo's fundamentals remain robust, despite the market reaction. Duolingo's fundamentals remain robust, with 40% year-over-year revenue growth in Q3, approximately 30% growth in DAU and MAU, and 11.5 million paid subscribers. The company also raised its full-year revenue guidance to $1.03 billion. Duolingo is actively expanding its AI moat, leveraging AI to enhance user engagement and learning outcomes. AI-driven video calls, new PvP games, and guided calls are improving user retention, with the max tier already making up 9% of subscribers. Next, we'll delve into the valuation reset and what it means for investors. Duolingo's valuation was reset because analysts lowered their EPS estimates for 2026 and 2027. What does the DCF say? This is the key part. After the EPS estimates reset, if you do a DCF, it shows that Duolingo is only 10% undervalued. To get this number, you need to account for the stock-based compensation and unearned revenue, which inflate the free cash flow. Once you get rid of them, you get the true free cash flow. So why it's a buy from me? Although it's not that much undervalued, and margins won't expand much in the future revenue will still grow at high numbers for years. And if the company expands on other educational areas like they say they will, this will continue for longer. So don't expect for the price to return to all-time highs soon, maybe in 12 months. Let's now consider the potential risks and rewards associated with Duolingo. Key downside risks include prolonged conversion weakness, intensifying AI competition, rising content costs, and macro headwinds impacting advertising spend. A failure to re-accelerate bookings could prolong multiple compression and volatility. A conservative scenario analysis suggests a pathway to 50% upside. This involves 30% re-acceleration in 2026 bookings, 30% margin stabilization, and a 20x sales multiple re-rating, leading to a valuation of approximately $300 per share. Finally, let's establish a decision frame for potential investment in Duolingo. My investment checklist includes stabilizing sequential DAU growth, neutral or positive Q, for booking surprise, gross retention above 85%, and minimal cash burn. It's a high beta satellite position for me, so I expect it to be flat for days or a few weeks. And if the Fed doesn't lower the rates next month, this will continue until Q4, so it's a good idea to spread the buying for weeks. The market's fear focuses on short-term bookings deceleration. However, patient capital can capture asymmetric upside by recognizing Duolingo's multi-year compounding story, driven by user scale, AI innovation, and a strong balance sheet.